end of that music means we have started one of the favorite hours of my entire work week. I've come to love this because this program has made me a little bit of money in the months we've been doing it. Welcome to Trade Masters. If this is your first time watching, we get 2 expert traders. They bring 5 picks round by round, and they can be long-term investments, they can be cash flow picks, they can be bearish picks, bullish picks. Doesn't matter. They bring their best 5 picks, and at the end, a winner is declared. And I love it. I love this because it gives me something to think about. And we're in the middle of a violent rotation right now. If you looked at your screen, Alcoa is up 10%, oil's up, growth stocks getting hammered. Interested to see what the gentlemen here tonight have. And the 2 gentlemen we have tonight are Cody Mackey, who upset Tyler Craig last week for his first Trade Masters win, and then a previous multi-time winner, our friend from Canada.
Cody. Where's she going, eh?
Old money. Yeah, listen, I got an A. That's all we need. We get a rock. Hey, Cody, now, 1 joke, 1 pick per round. Now, you're not judged on the jokes, at least not on the scorecard. Now, I will internally judge you harshly for them. But Cody, as defending champ, who goes first?
I'm going to let Gert go first because I'm going to actually try to implement the strategy that I wanted to do with Tyler, where I'm just going to punch back against whatever he gives. He gives an
input. Calculations. If Greg goes first, I have a 3.67% better chance of winning tonight.
According to my calculations.
The counterpuncher, the quintessential counterpuncher. I like it.
All right. Round 1, let's do this.
All right, well, let's go right to the bear section because you know, lately we've been, as you said, been in an up down different kind of market here, a little bit of volatility, a little bit of price volatility. So anyway, let me just get this kind of organized here somehow. Sorry, just got to get this.
It's okay. I understand that you're sorry.
Sorry, eh? So I guess you can. I can see this and you guys can't. Sorry, it's just the pictures are in my way here. That's all. All right. So first up, BBY Best Buy. My first bearish pick. Lots of reasons why this is going down. Most notably, the markets are looking weaker. Now, obviously, some sectors are kicking butt and some aren't, but this one here looks pretty ugly to me. We've got this little support level here, right at the old 100 here. You could make the argument it's at 99, but I like round numbers, so I'm going to say 100. Got a pretty big beat down after earnings here. I got former support here at 100. Trying to hang on here. All the moving averages crossing over. Like I said, for me, the level, the round numbers, those levels always make for good trading. Whether you're going up, whether you're going down, everybody pays attention to that stuff. So for me here, looking at this one here, this is just a simple breakdown. It's just a simple bearish breakdown. If we break 100, you're getting to 90 pretty easily as a first target. And I think you could probably even get to, 85 or 80 as a secondary target there. So with this particular pick, like you said, very, very simply, I'd be looking for a shorter term. And one of the things I want to note about bearish picks here, if you guys have never heard this before, it's something to put in the back of your mind. Bears take the elevator and bulls take the escalator. So if you're doing bearish picks, typically, not always, but typically, they're going to get to their destination a lot faster than when you're rising. So that being the case here, I'm actually going to go a little bit shorter term here. I'm going to go to the April expiration. I'm going to buy the 100 put, and I'm going to sell the 90 put. Okay, so $10 wide. It's going to cost me about $332 per contract. If we look at the trade tab on this one, got a couple of things in here.
You got some other things in there.
Yep, we'll get rid of that. And bada boom, bada bing. So we're risking 332 to make 668. Last time I looked, that's 2 to 1. That's what we're looking for out of a trade. So like I said, with this one here, this is just a break of 100. If it breaks 100, like I said, I see 90 in its future very, very quickly.
Yeah, pretty clear.
Very basic trade.
I mean, enter in about. I mean, what do you have a specific entry level? Because with technicals, if you're new to trading, we call it a trigger, a point where price hits a certain point that gets us in the trade.
Yeah, anything under 100, you could do 10% of the ATR below 100. The ATR on this thing is 344, so 34 cents. So anywhere 30, 40 cents under 100. So 99, 99.60, 99.50, anywhere in there, I think you'd be happy. If you want to be more conservative, you look at this little candle right here. 98.66 is the low of it. I think that's waiting a little bit too long myself. Like I said, for me, anything under 10% in ATR under 100, I think the entry's good.
You beat me to it. I was going to be the contrarian and say, I mean, you can go 30 cents below that low and make it 98.36. That would be being really conservative. And I think if you hit that, I think a 90 target is very nice. I have one question. Why did you do the spread versus just a straight put?
Well, it's all about cost, right? So, for some folks, even 332 might be a little bit too much. You could trim that, no problem. But a straight put, you're looking at putting out $500 $500 here. Not quite 500, 480 anyway. That might be a little rich for somebody's blood. Now you could leg into these things, which is typically what I do anyway. I don't have an issue with that. I just know that the bear put spreads are nice. You've got defined risk, defined reward. It's not costing you quite as much. That's basically the only reason I chose the spread.
I like it. No, I like legging into the spread better than doing the straight spread right away.
And whether it's best buy or not, listen, we've seen ample evidence of some of the downward price appreciation. Markets have been behaving differently the last couple of weeks. Bearish trading was not in vogue for the last year. It was punished severely. We've seen ample evidence in multiple charts. The bearish trading's back. Trade accordingly. All right, let's hear your joke, Greg.
All right, a boy and his father are walking in the park, and the boy looks at his dad and he says, "Daddy, what's an alcoholic?" And the dad says, "Do you see those 4 trees, son? An alcoholic would see 8 trees." The kid says, "Dad, there are only 2 trees."
Well done, sir. Well done, sir. All right, defending champ Cody Mackey. What you got for us in your round pick?
Well, I actually don't have a bearish pick, so I can't even counterpunch that one. So I'm just going to go for a nice little, since he did a breakdown, I'll do a break to the upside. I'm going to go with an airline. I'm going to go UAL. I see the similar pattern setting up on UAL as we saw with Southwest Airlines last week. And that was the move up with the high base, potential move to the upside. So I see a very similar pattern. So real quick, if you could pull up Love. Just because the reason I like this pattern is because of the move I saw on Love. Just get rid of that extra thing you got there. Is it had that previous high base and then a move. And now it's actually doing its own high base. But I like UAL because it doesn't have any resistance back above it. So love what's happening with Love, but go back to UAL now, because UAL is actually my pick. There's no resistance in the way up until about $68 or $70. So with the break, we have a long room to run on the move from UAL, and we've seen it happen from other airlines in the past. So I think it's a very clean chart where the trigger is right above those previous highs, right around $56 or so, is where you could trigger into that and play it up to 68, which if you put your stop loss just below the break point or even below, the base itself around 52, you're looking at a $4 risk with almost a $12 gain. So you're looking at 3-to-1 reward to risk ratio on that trade right there.
Yeah, listen, there's a few areas that have been, we've been pushing hard at tackle trading, reopening plays, commodities, value plays in general. You throw a Bitcoin in there for me, but to each their own. Reopening plays got a lot of juice behind them. Once again, they are part of the beneficiary of this violent rotation we've seen. I like the breakout play. It's got room to run. How would you play it?
This one I was actually looking at something very similar to what Greg was talking about. I was looking at possibly legging into a spread because of how much the move can go. If we were to go out, I'd go out a little bit further than just the April, just because we're going to the upside. Yeah, June is what you got to work with. If we were to buy the call right there, just slightly out of the money at $55, and then if it runs to, so pull that down for me. If it runs up to that 68 or 70, then that's when we would look to sell the 70, which would then, as the option appreciates, be closer to that 750 that we're going to pay to get into it originally. And we could actually spread this out after the fact to make it a low risk or possibly even a zero risk trade after the fact. So I would want to leg into the spread starting with just a normal call option. If we get the break and the run, then we sell the call behind it to spread it out to make it either a low risk or a zero risk trade if it continues above 70 after that.
Yes, and if you, like, once again, this is an advanced technique. So if you're new to trading, you're like, I didn't understand any of that. It's buying a call option after a upward movement, then selling a call option to create a risk-free trade or a lower risk trade. And if you want more information on that, you can attend any of our Traders Lounge and ask about that strategy. Pro members, and if you're not a pro member, sign up for a 15-day free trial today. We have Traders Lounges every morning at 11 a.m. Eastern, and we have one tonight as well on Wednesday night, hosted by Coach Old Money Holmes.
And a quick question in the chat, which is exactly why I was looking at this. Eli's got it. The reason I'd be looking to buy a call versus doing straight stock is there's very low volatility on the stock right now. So that makes it also advantageous for us to be able to buy a call option versus doing a straight stock play on this. So good job, Eli, in the chat. All right. My joke. What is the least spoken language in the world? Sign language.
I like drunk dad joke a lot better. Greg, what you got for us round two?
All right, I'm going to go another bearish play here. I'm going to save my my bulls for last. Let's go to the old Home Depot here. So again, we're starting to see breakdown.
Hey, Cody Mackey, how's your strategy of following him treating you when you don't have any bear picks?
Yeah, that's hurting me right now.
Just threw him a curveball, didn't I? So this one here, like I said, this is another simple, if I can get it to set right, just another simple breakdown here. Obviously, we're seeing lower highs and lower lows. We're getting moving average crossovers here. I'm gonna hit this a little bit bigger. We're getting these bearish retracements. We kind of missed the bearish retracement, kind of retraced back right up into this old support level right there. So we missed the retracement. Well, the old theory is if you miss the pop, wait for the drop. Well, in this case, it's the exact opposite to that. But anyway, I just like the breakdown here at 255. Again, another round number here. It's just everything looks heavy right now. And
hey, we put up a weekly chart while you're at it. This has a really nice setup here in the sense that it tested the 50 weekly last week, got that first test, looking to close below that. There's a avalanche of clear air to the bottom side, isn't there?
There certainly is. So like I said, this to me, this just feels heavy. The market feels heavy. If you start looking at the overall indexes, we're starting to make lower lows and lower highs in the indexes too, right? So we're starting to feel this now. Fair enough, there are things that are just going gangbusters, oil, things like that. It doesn't happen to be like that for these brand names that we know, Home Depot, Apple, Walmart's, they're all getting cratered here. And so this one here, like I said, I love the fact that this here is a round number, 255. Like you said, you got a lot of clear air here. I think your first target is probably easy 235 anyway. And then, beyond that, you could be looking at 225. So definitely got a fair bit to go here. Again, this one here is going to be very simple. I don't like going out to, June is too long for me as far as I'm concerned, if you're buying spreads or even, straight options. This has May, unlike the other one we were looking at. 79 days is fine. You know, some folks like 3-4 months. I don't tend to go out that far because, again, especially when I'm looking at the bearish side, my expectation is that when this starts to fall, gravity takes over and it's really going to fall. So I don't need to go that far out. My expectation is if I start looking at this and I start saying, okay, what's the ATR of this thing? It's $6. Well, if I'm only expecting a $20 move down to the bottom, that could happen in a week, week and a half, 2 weeks, right? I don't need to buy 4 months for that. So this is why I'm looking at this. I don't mind doing the April myself. That might be a little bit aggressive for some folks. It does set up nicely here. You do the 255, look for the 245 here. You could
That
go
volatility is really low for a stock this expensive. I mean, I was expecting a bigger option price here.
Yeah, it's not that, and the trade, once you set it up, you know, you sell the 245 here, you're into this trade, you're into this big stock for $375 with a $10 range here. So again,
What does a 255, 235 look me? Because I think this one's got room to run down.
So yeah, you're looking 600 and potential to make $20. So you're 600 into 14 bucks, right? Or $6 into 14, I should say. So 1,400, you spend 594. So regardless, if you think that it's going to get to 235, which, like I said, that would be my first target.
And what month did you use there again, Greg?
That was the April.
All right.
So, you know, sorry, wrong tab there. So that's the April. Now, if you're a little bit more conservative, I have no problem going out to May. It's going to cost you, you know, a little bit, like even this one year, it only costs you an extra 100 some odd dollars, right? For the same thing, and you get more time. So being conservative, there's nothing wrong with that either. So 245, 235, you know, either one. It depends on how much money you want to put out at the time, right? Like I said, you go to the 245 and you're putting out $300, right? 400 to go out to May, right? Or 375 to go out to April. So again, just easy plays here. I'm not trying to reinvent the wheel here. What I'm doing is I'm letting the market tell me what it wants to do. And right now it's telling me that Home Depot is out of fashion. You know, it's getting beat up pretty good. They didn't like it on earnings, right? It showed a lot of weakness on earnings. It tried to rally back up, right? Oddly enough, right to this old support, new resistance zone, and it's failed. So now we're just waiting.
I'm sold. What's my trigger to get in?
So your trigger, so I like anything below 255, but I wouldn't blame anybody to go below this low, this candle low here, 254. Anything below there, like you said, you still got a heck of a run below here. So, you know, for me, like I said, when I break that 255, I'm happy. I'm not worried about this fake out here. But if you are worried, just wait an extra buck. There's still lots of money in it.
So if you looked at this as a kiss of death type trade versus a lower base, would today's low be too aggressive to get into?
For me, yeah, because you could still get a bounce off of this here. Like this could channel sideways, right? And that's what I want to avoid. I'm not interested in putting on a spread, even though I've got lots of time and my theta is not going to hurt me too much. I'm not really interested in sitting if this thing decides to go sideways. So for me, if I get below that 255, below this candle here, or even be more conservative, get below that 254, then I think you've broken that support level and you're on your way through. If you try to get aggressively now, you might get that little bounce off that 255 level, and you could just have this pinball effect here. And if you're doing a debit spread, that's just costing you money, right? So that's that for me. That's the way I play it. Is I need to see. I've always been a confirmation guy. I need to see the break of that. And again, round number for me, I see the break of that 255, and I love the trade.
Listen, my portfolio is very light on bearish delta in any form. So I like this. I'm going to do this trade in some version now if I get that trigger. Now let's see. Jokey joke.
All right. So I was sitting in a bar one day and two really large women came in talking in an interesting accent. So I said, "Cool accent. Are you two ladies from Ireland?" One of them snarled at me, "It's Wales, Dumbo." So I corrected myself. "Oh, right. So are you two Wales from Ireland?" That's about as far as I remember.
I want to know the over-under. That's two alcohol related jokes. I want to see if Greg has 5 for 5 on that. All right, round 2, Cody. Listen, I like the bearish trades. I'm sure bearish deltas. I'm sure a lot of traders are. I got lots of bullish delta. Oh
Yeah.
my goodness, I got a whole bucket of bullish delta.
He's killing it with the bearish delta, but I did have this one that I wanted to. I mean, Old Money Holmes, Mr. Dividend himself. I wanted to sneak this one in before he had an opportunity to do it himself. We're going to go Kraft Heinz, KHC. KHC, and could you give me a little bit of time on that chart there?
1 year?
Yeah, just maybe give me 2 years or so.
Okay.
So actually, no, you got to go 3 weekly. Excuse me. Sorry. What I want to show is you can see how this has been in a downtrend. It's bottomed out, and now it's moving back to the upside. And right around 55, about 30, or not 55, 35, excuse me, around 34.75 or so is where there's that line that's been battling against on the weekly chart. Now it's above that line, which gives me indication that this long-term high dividend paying stock is hit a reversal pattern. So whenever you're looking for those type of long-term holds that you want for type of dividend plays, this is the type of pattern you want, because you never want to try to guess the bottom. You want it to hit a bottom and then start moving back to the upside. So that way you know that you're picking this up at a decently low price, but not a price that can continue to go lower. So I love the reversal pattern on this. And then go back to the daily for me. I love the daily chart with the weekly showing that we're in that reversal pattern. I love the daily chart showing that bull flag type pattern. And with what happened at the close today, where a lot of things were kind of broken, this actually was resilient and moved upward. So I really like the movement on today's chart. I think a play above yesterday's high for a longer term investment on a dividend paying stock such as Kraft Heinz is a very good play. So this would be a buy and hold the stock long-term play.
All right, so you cover, how would you manage it moving forward? Like,
So
would you sell calls against it?
Yeah, so on the short term, if you get into this and it were, let's say, to jump back down to 35 or so, let it stop you out. No problem, no fuss. If you were to, play it as far as calls go, if you were to buy it right here, your first target's going to be around $43, which is the previous weekly resistance. Other than $43, there's not much above it that's really going to stop it. So if you just want to play it as a directional play, just as a swing trade, that $42, $43 range is really the first time we see a weekly resistance. And so you can play it as a swing trade just up to that point. At that point is when I would sell my first call. And I try to get something a little bit out towards 48, which is that other previous pivot. So if it moves up to 43 off of the short term, you could sell a call up at, say, 48 at the other resistance. And then if it were to retrace or base in that time frame, you could cash flow off of your long-term play. And then if it continues to move up to 48, it might get taken away from you. That's okay. We can cash flow and we have the dividend and we have all the appreciation of the stock. So if you wanted to play this, I would say right now, if it were to break above today's high, would be a good trigger entry using 10% of the ATR. And then we want to see if it makes that move. Along that time, we can pick up a dividend until it gets up to that 43 mark and then sell the covered calls against it. So now we're using a high paying dividend stock with covered calls to cash flow at a bottom for a long-term investment.
Any concern that the sector stinks right now?
The sector does stink, but I think that this is one of those opportunities. The old Warren Buffett quote, when there's blood in the streets, it's time to buy.
Listen, Michael Burry.
I see the reversal in this pattern. That's why
the reversal pattern is classic. It's textbook. It's beautiful. Michael Burry, and one of the reasons the stock has some juice lately, Michael Burry, Big Short investor fame, came out big proponent of this. It's a Buffett stock, Burry stock, double B's. It's got some sentiment. I just worry about the sector and the overall market conditions. I don't hate it. And the reversal's textbook. And if you're looking for a long-term hold where you are like, listen, this market volatility right now is a little bit much for me, you could do a lot freaking worse. There is some sentiment and some juice behind it. And the technical pattern is classic.
Yep.
I would expect nothing less from you, young Cody, than a classic.
To answer your question in chat, deep in the money call is a stock replacement. You could do that. However, what I love about Kraft Heinz is their high dividend. And Greg can speak more to that than I can because he does way more dividend research than I do. But if you do a deep in the money call, yes, you can get the delta move, but you don't get that cash flow.
Yeah, no. If you're not trying to pick up the dividend here, I don't see the point, to be honest. And I doubt I see the point of your coming joke, but I will have an open mind.
Oh, well, it's a joke on trickle-down economics, but 90% of the population won't get it. Hey, Greg liked that one. Come on.
I did. You heard me.
Listen, your setups have been classic technical, and your jokes have been garbage.
I have 3 dark humor jokes that I'm saving to the end. So
okay. Now I got something to look forward to, and I'm always looking forward to another round. Round 3, Greg. Let's do this.
All right. So since Cody's into these dividend payers now, I've converted them. We're going to go to another dividend payer here. So this one here, McDonald's, I'm loving it. This one here is going to be a little different animal than I've never brought one of these before to Trade Masters. So this is going to be new, and I'll throw it against the wall and see what sticks like spaghetti. So my trade here for McDonald's is an iron condor, just a cash flow trade on this one. As you can see, since essentially October to now, this thing has just found a beautiful little range sideways, just tickety-boo all the way along. Now it's on the lower part of the range here to enter this particular trade. Obviously, trying to get that a little bit bigger. What the fat finger? Sorry, boys.
Oh no, it sticks on me like that all the time too.
So what I'm looking for here is a little bounce right about anywhere where we are here right now. Maybe a bounce off 205 in the next day or two. I want to see that bounce up there. And then there's 2 ways to play this iron condor. There's the straight way where you put the trade on and you set it and forget it kind of thing. Manage the risk as you see fit. Or there's the other way that I really like to do these, and that's to leg into these. Okay. So what I'm looking at here is a very high probability a iron condor here. Trying to remember what I used when I did this today. I think I went to April 1st, and I was actually looking at a 19 delta. Let me just get some delta on here. Now the deltas will have changed since I looked at this, so it's now a 20 delta. So looking at the 195 and buying the 190, so a $5 wide, you're getting 61 cents, which is more than your 10%, which is what we need. Okay, so that's the bottom side of this thing. Now, what I like to do is kind of go equidistant to the other side. This is, again, if you're going to put this all on at the same time, I don't personally have an issue with it. I will show you how I like to do it after I'm done this here. So there is no 20 here, or 19. When I looked at this today, when I set this up, this was actually a 19. So I was looking at the 220, 225 here. Make it equidistant. Right, wrong one. A little too far there. So we're looking at a $1.11 credit for a $5 risk now. Someone might say, and I'm sure it's already in the chat, well, aren't you taking more risk than you are reward? Yes, you are. And that's kind of the deal with these things here. But what I want to show you is our break-even points here. There's a over 62% chance that this expires, between the break-evens. There's only a 15% chance it gets above and a 23% chance that it gets below there. But look at the expected move. We have 90-some% of the expected move within this range. Okay, so right off the bat, again, you're only going to make 274. You're going to risk 726. This doesn't seem right for some reason. Let me look at this. That's why, because I have 2 of them on there. Say something doesn't quite feel right here. That's more better. So again, like I said, numbers are pretty well similar here. So you're looking at, you're looking at some pretty good probability here that it stays within this range. We're basically right in the middle right now of this iron condor here. If you start looking at prices, our 195 is way down here and our 220 is up here. Okay, so you've got room in between both of these to stay out here. And if this thing just trends sideways like it has been, basically since October, so what is that, 4 or 5 months this thing has been going sideways. If it continues to do that, then you sit back and you collect a pretty decent credit out of it. Okay,
How far did you go, go April?
Sorry, what's that?
How far did you go out on that? You go April?
April 1st. So I like to keep things right to 30 days. This happens to be 29 days. So nice and close, like I said, just less than a month out there, just kind of sit back and collect some cash. Now, like I said, the way I like to do this, as opposed to putting the whole thing on at once, is to leg into this trade. So when you get the reversal here, which we're looking for, you get that little bounce that we're expecting. We've had it several times before. Once you get that bounce,
and you have to wait for the bounce, correct?
You have to wait for the bounce, yes. Right? Because if this thing fails, then it becomes a bearish trade, right? So with this thing here, when you get that bounce, you go and you throw the bull put on, and then you let it run up, and wherever it starts to pivot up here, you can then throw your bear call on there, and it will greatly enhance your trade and your chances of cash.
I love that. Do you have a probability cone you can throw on the chart? Because I'm looking at the probability cone here on my screen, and it looks really pretty when you have that probability cone. That the levels you're looking to throw on are just at the outside range of that 68% probability cone, which is the standard. I like this as an iron condor, and very rarely do I do an iron condor on a stock individually, but this is a very good iron condor candidate.
And if you have any more questions about this iron condor, listen, there are so many more ways to make money in the market than smashing the buy button. Smashing the buy button's been a great strategy the last 4 months. Starting to not be as profitable the last 3 weeks, right? Lots of ways to make money in the market. Learn those ways. If you have any questions on this, 10th Traders Lounge tonight, Greg will be hosting. All right, let's hear your alcohol-induced joke, Greg.
You know what? I hate to disappoint you, Mark. I gave you the 2 alcoholic ones right off the bat. So now we're gonna go politics. How's that? Since everybody likes politics. What do politicians and diapers have in common? Both should be changed. Both should be changed regularly, and both for the same reason.
Yep.
Yes, indeed. Listen,
Yep.
I think we can all agree on that. All right, Cody, round 3. Let's do this.
All right.
And if you have a probability cone joke right now, Cody, I'll declare you the winner. I just want to hear Cody say probability cone like 3 or 4 more times.
I do want to ask because there have been 2 sectors that have been really hot lately. There have been the energy sector and the financial sector. So I can pick a pick from either. So I'm going to throw it out. Like, which would you like to hear now?
Give me some energy.
Give you some energy. All right, let's go with MUR.
Murphy Oil.
Murphy Oil. I love that resistance level that with the high base that's fighting right now at $18 where its previous pivot point was. So go draw that line all the way back to that previous pivot point, if you could, please. I really like how it's pushing a high base up against a longer term resistance level. And with that, when we see that break, and we've seen this sector being very hot, that we can see that if it were to break that, we have some upward potential. And the first upward potential that I'm looking for is actually the 200 weekly moving average, which is up around $23. So we can go from the break of 18 to $23. We can see that this high base pushing a longer term resistance with about a $2 risk. We're looking at a little over a 2-to-1 risk reward ratio. With this, it being a cheaper stock, you could either do a straight stock play on this, or with some of the volatility on this particular play, you could, volatility is not necessarily great. It's around 7.6%. So you could do a call option to possibly spread it out again. But I actually like this with it being a cheaper stock, playing it directionally, just buying the stock, playing it to the upside from a break of 18 up to 23 at that previous resistant level.
Listen, there's two trades I know I'm taking tonight if they trigger, Home Depot and this one. Listen, we have been pounding, and if you are just new to tackle trade, we've been pounding energy for a while now. It has a lot of room to run. You know, it just feels like one of those trades that's going to keep going and keep going. Like it for position trade, you want to swing trade it is great. There's lots of way to play it. That's a clean chart. Volatility on Murphy's a little higher than I thought.
Yeah, it is.
Which well, I love that. Like, you know, as Rock, I was looking at the option chain. It surprised me. I was like, wow, I can get some nice juicy calls. So if I'm positioned this trade on the break, I buy the shares outright, wait for a nice little run, then start selling calls. I don't think you'll be disappointed. Lots of ways to play oil right now. This looks like a pretty good one. And I doubt your joke's going to be a good one, but I'm going to keep an open mind until I laugh.
All right. So every time I go to a wedding, all of my elderly relatives are always, you know, poking me, saying like, "Hey, you're next." They didn't seem to find it as funny when I did the same thing to them at funerals.
Now we're recycling jokes. I did that one.
Oh, did you? Oh, I didn't know. Sorry.
Yeah, that's what I'm not in my head. It's a good joke. I've just heard it before.
Oh, I didn't realize I had a recycled
Listen,
joke.
but your pick, once again, Cody, the one thing I like is that your technicals are clean. I mean, this is what I mean, listen, trading's amazing. If you're a young man, young woman, I mean, Cody, when did you start trading? 4 or 5 years ago?
About 6 years ago.
Yeah. Listen, I mean, you got to put in some time, but you can be, I mean, this is something that will pay off the rest. I mean, I wish I would have been doing this instead of playing poker at Cody's age. Greg, I have no doubt that your joke is going to be better. Let's see about your pick. Round 4.
I didn't realize I used the recycled joke. Dang it.
That's my counterpunch there. Recycle joke. All right. So since you took the energy play, I'm going to go to the financials. So obviously, unless you've been living under a rock, you've seen that financials are pretty wicked strong right now. We have a candidate, an old stalwart here, dividend payer that's just setting up real nice here. Lots of rarefied air. So Bank of America here. I was just about to say Bank of Nova Scotia. Sorry about that. Wrong country. Anyway, I like this one. Had a nice little run up to 37. Failed, little pullback to old support, new resistance. Or sorry, old resistance, new support, I should say. And now it's testing this 37 again. So this is a very simple, this to me has stock written all over it. You could do an options play on this, but for the price of the stock, now it is a low IV rank, so you could you could look at a spread, but frankly, for a $37 stock, I think you just get in here, you get the pop. You know, the last run was $2.50, $3. I would expect you probably get that again if you did your pay range here. You know, the last time there was a breakout, it was a $4 run. This time a $3 run. I would expect you get another $3 run, at least up to 40 here. Again, we'd have to look out. I don't think there's any. Oh, wrong one. 3-year weekly here. Yeah, like there's not even any. So there's
oh, the last resistance we got on Bank of America was pre Great Recession crash 12 years ago. Oh, you gotta go back higher than 10.
So higher than 10. So this is what I'm saying. You've got free air out here, and you've got a sector that's cooking, that's kicking butt. So
I mean, don't you have to in your portfolio? And I'm not talking your trading portfolio. Your portfolio. Don't you have to have a little financials?
Yes.
Yeah,
yes, you should have financials.
I mean, this is something that we've been advocating for a while. You got to have a little bit of financial. I mean, I know Apple's sexy and Netflix sexy, but I mean, the rotation that's going on is so obvious, and everyone's talking about it. Every investment bank is talking about it. Every financial media. I mean, it is telegraphed. Value. If you're overrated, listen, and I say this. How you've done in the last month will tell me what your portfolio is. It will tell me what your portfolio is. And if you haven't been having a good time, you haven't been rotating some of that into tech along with everybody else. So it's good quality trade setup.
Right.
Position trade, maybe.
Yeah, you could run it position trade. You could just swing trade it too. It'll get you enough of a move. You know, you can buy, because it's such a cheap stock, you can buy enough shares. You want to get in above this high, obviously. Get your stop loss down here below the, you know, the kind of the high base here below. I think that's the 10-day moving average there. Typically, I have the 9 on there, but you know, anywhere below this kind of noise here for a stop loss. Yeah, build into a position. It is a dividend payer. You know, no issues there. It is a covered call candidate as well. You know what I mean? There's some money. You pick this up for 37, you know, you drop in a 38 there and you're still collecting, you know, 70, 71 cents out of it. That's, what would that be? At least 2% anyway on a blue chip stock. So, you know what I mean? That's not too bad either, right? You've got lots of choices here. Just make sure that you have a trade plan before you enter it. You could do the stock, you could do the, you know, you could cover call it, you could do a lot of
What
things.
does just out of curiosity, what does a long-term what if I just said I want to buy a long-term leap? What does that run me right now?
All right, so like January 22.
Yeah, because this theme is either going to play out or it isn't.
Yeah, so you're looking at $400 or $500 for a long-term leap
Okay.
to buy the call option. And you could sell calls against that, right, to reduce your risk. So just a lot of different ways to play this. And you do want some exposure in this sector. It is cooking. There is a rotation. This is part of that rotation. Buffett owns a bunch of this stuff too, if I remember correctly. You know what I mean? It's in vogue. So
it is in vogue indeed. And Greg, I have no doubt that your joke will not be in vogue, but I will laugh anyways.
So teacher's pet. So the math teacher says, if I have 3 bottles in one hand and 2 in the other, what do I have? Student says,
no, wait. 3 bottles.
3 bottles,
in one
hand and 2 bottles in the other hand. What do I have?
What do you have?
Student says, a drinking problem. See, I threw you a curveball, Mark. I said no more drink.
You said no more drink. Listen, whenever you're on Trade Masters, Greg, there is a 98% in the probability cone that I have a beer tonight. You know, so you get that probability cone, and then you put the beer in it, and then you go college style. Cody, it hasn't been too long since you've been in college, but you've been a master on these setups tonight. Give me another pick, round 4.
I'm torn between 2 different financial picks right here. I might just use them both. I don't know, because I have a naked call put that I wanted to end with. But you know what? I might just do both financial. But let's go with MasterCard. MasterCard, MA. So the setup right here, Greg's already got his indicators on there. I don't even have to tell him to draw anything because he's already been watching this. And what's better than this is show me the weekly if you could, because this is the all-time high of MasterCard with the, that's fine right there. 3 years is fine. I mean, it's there's nothing left behind it. There's
sorry,
nothing.
I gotta jump in here. That sounded so much like Richard Dawson. Show me the answer. Show me the weekly. That was awesome, Cody. That just made me laugh out loud, buddy. That's
but
awesome.
I really like how on the weekly chart. So this is what have been doing well for me here on Trade Masters is these multi-month consolidations pushing up against all-time highs when they're looking to break above those. So we now have that again here on MasterCard. And the daily chart gives you a very nice entry price on the simple fact that that high that happened this past week is the all-time high. So we're looking at this high base to play it above the all-time high, right there above 368.79. So we can do a 10% ATR above that and play this to the upside. This would be a longer term with the move, with the big break of that all-time high. So how do we play this? This is a more expensive stock. The way we would look to play this would more than likely be more of a bull call spread to the upside, unless you have, rich veins and you just want to own this thing outright and you want to pay that 370 to own this stock. So if we're looking to do this, we're going to do a bull call spread. Greg, you're already on it to get it set up. That's good right there at the June. Let's look to build a nice spread around this thing right at where we're breaking out, moving up. So you're already there. Yeah, 370. All right, let's go ahead and maybe get a 400 or a 390, depending on how far we want to go out on that. And with that, what does the risk graph look like for a move to the upside?
So you'd be risking 1,000 to make 2.
Exactly. So we
You're
got a
2 to
2-to-1
1.
spread, and because I mean this isn't a more expensive stock. I mean this is one of those stocks that I'm like, MasterCard, why don't you just go ahead and split so you can let more people into this trade? Like I'll be honest, there are some stocks that just annoy me that they have refused to split. My number one adversary is Chipotle. Like why a restaurant company, burrito company wants to be $1,000 stocks beyond me. But this is one also that I wish they would split because it makes it more difficult simply to play it as a straight stock, which is where I actually think the true play is. With a break of an all-time high, overall, longer term would be the best play for MasterCard going out. And it's hard to do that for a lot of our traders. So we have to simply swing trade this. I think that if we were to see a break, I mean, it's been bouncing around 320 to 360. So if it were to break out of this, a run to 400, I do not think is out of the question. I think this is an easy play. How we play it is really up to your own trade position sizing and how you want to work it. This is probably the one that would cost you the least. Next would probably be a long call. After that would be a straight stock play. But I love this in all 3 ways that you can play this directionally bullish.
So Cody, question for you. Sorry, if you don't mind me jumping in there, Mark. So this here, $1,000, 1,028 to make you almost 2 there. What happens if you're a little pricey here? What do you do there? Because that's probably over most people's risk tolerance.
And we could adjust from there. We could absolutely adjust it from there. So a different way to do it would be to decrease those ranges or decrease the time allotted to it. We would have to make this a contingent type order where it's going to put in the order on the options with the break, because we don't want to jump the gun and just buy right away. That's not what we want to do. So you would have to be able to set up the contingent order, which I could explain, but it would take me a little bit longer than I think the 2 minutes I have here to explain this trade.
So a question for you: would you put in a stop loss here to make sure that you don't lose the full amount on the bull call if it pulls back? So you could negate some of that damage if it's done. You've got until June here. You've got a long time to go to make it to that 400 mark, which really isn't that far away. Would you consider a stop loss, say 360, 355, something like that? If it got to that 350, if it happened very quickly, you only might lose a few $100 as opposed to the whole shooting match.
Oh, absolutely. Yeah, we're never actually going to risk the full $1,000. Right. And where you put the stop loss down below the actual high base, I think because this is a break of all-time highs, I think you could actually be a little bit tighter on your stop loss and place it below the break level itself. So I think you could actually go up a little bit more with the break level itself to also decrease that risk. So yes, it may be showing a risk of $1,000, but I would never actually risk a full $1,000.
Okay,
that would never happen. Mark,
you got a theme that could push MasterCard higher? Because I understand the bank theme big time, right? I understand the energy theme big time. Like, what's the theme that gets me excited to do this trade versus another?
Overall theme? I'm just looking at technicals here, to be honest.
I know, you're just looking at technicals. Themes have been so powerful in the last year. I mean, they've been so powerful. I see it, once again, technically, beautifully. I get it. I'm just not sold. Sell me on your joke.
All right, so a son asks his dad, "Hey, Dad, am I adopted?" And his dad turns back to him. He's like, "Well, we tried, son, but no one would take you."
I heard that many years ago, but that's funny. That's a funny joke right there. I like that joke. That's a good joke. All right, listen, final round. Greg, let's do this. Oh, and I'm not going to pitch at the end. Listen, Greg tonight, Traders Lounge, in 40 minutes, 8:30 Eastern. If you're not a pro member, 15-day trial, go to the tab. Cody hosts the lounge every Wednesday. Greg is there on Thursdays. Every morning, listen, two good coaches. And I mean, the technical analysis tonight has been A plus. And technical analysis will help guide you to success over the next 15 years. Smash the buy button was a phenomenon. Technical analysis is your guiding torch. We have a technical analysis 101 course. We have all kinds of technical analysis teachings. It guides us. Learn how to trade, really trade, not just buy and sell. Learn how to trade. You'll be happy with your personal investment. Invest me now, Greg.
All right. I'm going to, I actually had to pick from two pseudo biotechs here, I guess. I went with Gilead. So Gilead's just been getting destroyed, taken out to the woodshed for the last several years, essentially. But as we talked about earlier, Cody talked about reversals. This thing here has shown a very nice reversal, actually. Big run up. We've gotten a very deep pullback here, starting to show some signs of life here. I like this trade because we're starting to put in, we got a level here, right? We've got this level of support now, and we're getting the bounces we need here. Even though this sector, I don't know if this is actually in the healthcare sector or not, but healthcare is pretty beat up. This is still showing a little bit of life, even with even despite that, if you will. What I like about this trade here, it was one of the few bullish ones that I thought had a shot. I've seen a lot of bearish recently. Again, as Mark pointed out, for a while there, you couldn't find a bear, even if you were, up in Antarctica. So this one here, pretty simple, nothing too crazy. I like a breakout of 64 here. It's got to get up above a couple of these moving averages here, ideally be above all three of them. If it does, I think we get back up to, 69, 70 is pretty reasonable there. We're not, the ATR here is $1.40. So when I looked at this trade earlier today, we were within shouting distance of that 64. So this might need a day or two to cook, but a break of that 64, I think you get a pretty easy run up there. Lots of different ways to play this. You can play this as a stock trade. You can play it as a debit spread. You've really got lots of choices here, and it's this turnaround that I'm really looking for here. So much in the market today is overvalued that you got to kind of look for these things. The KHCs, Gilead Sciences, like I said, it's had such a beat down in the last little while, and now it's finally starting to show us some life. So this is what we're looking for. Now, this trade is not ready to go right now. Like I said, you need to wait for that break of 64, because otherwise, as I pointed out, with one of the other trades, this thing could just bounce, right? This could bounce sideways. You don't want to be sitting there, whether it's a stock trade or whether, especially if it's a debit spread, you don't want to be sitting there letting that fade to tick away. If it's a stock play, probably doesn't bother you that much, but you got to think about the opportunity cost as well. So this one,
I like that if it regains the momentum, which is always an if, right? I like how its price action performed yesterday. Big down day in the market. Gilead fought against it. I mean, if it can regain that momentum, which is the big if, right?
Yeah.
So.
And it's right now it's fighting those moving averages, right? So you got two that are pointing down, you got the longer term that's pointing up. It's going to tell you this in the next few days. Like it's either gonna retrace back down to that 61.5, or it's gonna push up. Like you said, yesterday was a pretty big down day, and it showed a green candle. Failed kind of right at the 10 there. But again, we're not willing to. The beauty of swing trading, if you will, at least this is the reason why I love it, is I can set up a trade that I think has a good opportunity, but if it doesn't come, I don't really care, right? So I can set my trade into, let's say it's a simple stock play. I can set it up to enter above 64, right? So even 10% of an ATR above 64, I can set it up there. And if it goes down, what do I care? It's not going to trigger me in. I don't really care, right? So I can be patient as a trader and wait for these things to set up. Now, if it does get to that 64, what you're going to see is all of these moving averages are going to have to turn up. And that's what we're looking for. You get all these moving averages moving in the right way. You get a little bit of a breakout here. And again, you've got this area from here to here, right? Like 69 is definitely, like, you can see how quickly this went through this area with no problem at all. Not even slowing down a little bit. As a matter of fact, it took less than 10 days to get through here. So, if we do get that break of 64, you get that $5 run, pretty easy. Keep your stop losses below those moving averages, and just an easy stock play. Like I said, if you're more into the options, I would look at this one here. You probably have to go a little bit further out because it may take some time. I'd probably look at the May here. And I'd want to be looking at break of 64. I probably want to go the 62.5, and I'd be looking at the 70 here.
Hey, Greg.
So, yes, sir.
On the options, volatility on that, I believe around 10%, if I remember correctly. Looking at that, I actually just mapped out. There's two different simple naked put trades on that. One of which is if you go out to April, down at 55, which is well below the previous support level, and you look to sell the 55, you can get 160 on 550 being held. So in April, wait, am I on the right one? Excuse me.
Yeah, you're on the May.
Yep. So I'm a little bit further out. Is that you can look to get around a 25% return on investment off of what they're holding. So you could sell the put well below a level to get a 25% return on investment on a theta type trade versus a directional trade.
Yeah, I would hold off on the naked put. I like the general concept because I like Gilead's been beat up. I understand Gilead. It's a stock I follow. I understand why it's been beat up. I think there's opportunity here. I just worry about the whole market is breaking support right now. And naked puts, got to be a little bit careful right now. But I do like the concept. I do like it. These are giving me something to think about tonight. It's a stock that this setup, this is why I love Trade Masters. Because I wouldn't have thought about this. This gives me something to think about tonight. I like the regaining of momentum. I do like naked put idea once the market cools off. Tech, just sell off already and get this done with. Let's just drop 10% tomorrow. Let's get this done with, form a bottom, and let's get back to work. All right, Greg, last joke.
All right. I quit my job working for Nike. I just couldn't do it anymore.
A solid B-, but
yeah,
it made me
that's
smile.
A solid dad joke.
Listen, they all can't involve alcoholics.
I ran out of alcohol.
So
I got to go to the beer store to get more
all right,
alcohol.
last pick, Cody. Last chance to impress. Let's do this, sir.
All right. I'm gonna use the other financial pick rather than a naked put play. I'm gonna go with Blackstone BX. I really like BX as far as this. I mean, it's a little uglier of a chart, but it's holding that 20. And if you look at it on the weekly, that's really what turned me on to this particular trade. Is we see this bull flag on the weekly chart after the move. This again are some
already like it. Already like it.
Yeah, is on the weeklies. Hasn't even had a chance. So we're looking for a break on the bull flag. So that would be, you could be more aggressive and just take the high from yesterday or the day before, whichever is higher, and trade it that way. Or you could look at be more conservative and take the all-time high above 71.10.
What's their dividend yield right now? Because I mean, I don't trade Blackstone or invest in it as much as I used to, but it used to be like, I mean, that's why you position trade Blackstone or invested in Blackstone, because of the massive dividend. So what are we looking at? 5.5%?
$4 on $70, whatever that comes out to.
Now, what does that come out to be, out of curiosity?
4 divided by 70, we're looking at 5.7% return.
5.5%. I knew it was in that ballpark. That's a healthy dividend yield, right? I
love the bull flag on Blackstone.
I mean, that's been listen. And once again, finance. I think I think I like the banks a little bit better, but I really like that pattern. Because Blackstone is not a SPAC. Blackstone, when they have big moves up, have to take some time off. It looks like it's taken a nice month off. I just really like finance this year, Bank of America, all that. How would you play this? Because
Yeah, I mean,
once you get into the 70s, that can get out of
it does get out of
some
the range.
individuals' price range.
So if you look over at the top left corner of Greg's chart, the IV rank on this is 1.34%, meaning that options on this are very cheap. So if this is a little bit out of your price range, then I think this is a very nice candidate for a long call type scenario. So we can go out. I mean, we would have to go to the Junes because the Mays aren't in existence right now. So we go in at the money for June around 370, 380 or so. When you split the mid price on that, 380, you can get into a long call on this. And with the break to the upside, I mean, it previously moves from 60 up to 70. So we can expect a $10 move. So if we get a move of that, $80 a clear target on a long call type scenario.
I actually don't mind, and we don't have time to go into it. I'm looking at the September. I mean, this is what I trade masters. You give me an idea, I'll go home. I'm already liking the calendar call with longer than June. Because when I do a calendar call, which is buying a long-term option and starting to sell higher options against it to pick up a little bit, like those Septembers or leaps, I'm going to run the numbers on it tonight. Look at both of those. And in my Friday show, I'll, because this Blackstone, you have time. You don't have to make a trade tomorrow on Blackstone. I think there's something here from a calendar call perspective. I do. Buying a longer term option, selling, picking up a little bit upward movement.
A leap type thing, maybe a poor board cover call on top of that.
So there's something there. Now you made me laugh last time, Cody.
All right. Now this is a joke people might have heard before, but an oldie but a goodie is so 200s are in the woods and one of them collapses, and his friend frantically panics and calls 911. He was like, "Oh my God, my friend fell down. He's not breathing. He's dead." And the operator on the other side of the line was like, "Sir, calm down, calm down. Are you sure? We need to make sure he's dead." There's a silence, and then a gunshot, and he says, "Okay, now what do I do?"
Darkness.
That's 2 in a row, Cody. That's 2 in a row. I like that joke. That might be my favorite joke you've told yet. All right, listen. Cody, textbook perfect on technicals here. You're very impressive, young man. Like, very impressive. Love the BX trade a lot. Love Murphy Oil. I get Kraft Heinz. I really do. I'm just zero interest in consumer goods. I get MasterCard, UAL. Listen, I'm giving you an A tonight. A solid A. These are good picks. I like the theme. I love the technicals. Greg gave me some bearish picks, and I don't have bearish delta. And this market could have a real dump if those short-term technicals give out. So, Greg, you're the winner tonight.
Thank you, sir.
Final thought. And if you want more of Greg, 25 minutes from now, Traders Lounge Pro members, go to the events tab or to the calendar on the side of Tackle Trading. You can log into the show. 25 minutes, Traders Lounge. Greg, final word.
You know what? Yeah, I think there's a bit of weakness in the market as we've been seeing and talking about tonight. Be prepared. Make sure your portfolio can handle some rough weather. You know what I mean? Trim some of those bullish positions. Watch your levels more closely. You know what? One of the things that I do when things kind of get a little bit ugly is I start to check the markets a little bit closer, a little bit more. I wrote a rookie blog today, and you guys should go in and check that out as well. I was talking about listening to the market. So get yourself in tune with the market, listen to what it has to say. It will give you clues. It will give you a trail of what to follow and what to do if you're willing to listen to it. So, get in there, listen to what it has to say and act accordingly.
Well said, sir. Everyone have a wonderful night. We love you, community. Seriously, we genuinely love you. And that is not just, I don't say that kind of crap unless I mean it. Our community is the best community. It is a life-changing community. If you're watching this in some form, you're part of it. Thank you. Let's all make money in 2021. Just be a little cautious out there right now. Just be a little cautious out there. Have a good night, everyone.